Every country on earth is in debt, not just poor countries, not unstable governments. Every major power, every advanced economy. The United States owes more than $38 trillion. Japan owes over $9 trillion. European governments collectively owe more than $14 trillion. Emerging economies owe trillions more through international institutions. Globally, total debt now exceeds $315 trillion. That is more than 3 times the total value of everything the world produces in a year. Never before in human history has debt reached this scale, and this raises a question that almost no one asks. If everyone owes money, who is the creditor? There is no bank outside the planet, no external lender waiting to be repaid, which means the answer is deeply unsettling. The world doesn't owe money to someone else. It owes money to itself. And systems do not end up like this by chance. They are built. To understand why this global debt never disappears, we have to go back. Not to computers, not to digital finance, but to a financial decision made centuries ago, before modern finance, before central banks, before permanent debt, before 1694. Before that year, government debt worked very differently. Kings and states borrowed directly, from merchants, from nobles, from private financiers. Loans were personal, limited, and risky. If a ruler failed to repay, he defaulted. Creditors lost money. Trust was broken, and the system cleared. Debt ended. There was no assumption that borrowing would last forever. Debt was temporary by design. Then a single idea quietly rewrote the rules. Instead of repaying the debt, what if the government paid only the interest? Not for a decade, not for a generation, forever. The principal would never disappear. It would never be reduced. It would simply remain. This was the birth of permanent government debt. For the first time in history, a government could borrow without planning to repay. Debt was no longer a problem to eliminate. It became a structural feature of the system. Government bonds were created. They were promises backed not by gold, but by future tax revenue. And those bonds could be traded, bought, sold, inherited, used as collateral. Debt itself became an asset. At an interest rate of 8%, a £1 million loan generated £80,000 every year. Not once, not temporarily. Every year, indefinitely. Over 50 years, the interest loan exceeded the original loan. Debt had been transformed from a burden into a financial product. But there was still a weakness. A government could still refuse to pay. So the system evolved again. Debt had to be spread, not concentrated in one lender's hands, but distributed across society. Banks, insurance companies, pension funds, foreign investors. By the early 19th century, government bonds were held across borders. A British bond might be owned by a Dutch fund, sold to a French bank, and pledged as collateral in Germany. Debt no longer belonged to one creditor. It belonged to the system. Now, defaulting wasn't just a national decision. It meant triggering losses across multiple countries. Debt became interconnected, interdependent, systemic, too large to escape, too dangerous to break. By the 20th century, another transformation occurred: central banking. Before central banks, governments could only borrow what private lenders could supply. There was a natural limit. During the 19th century, many governments were forced to cut spending because lenders simply refused to lend more. Central banks removed that limit. Governments could now issue bonds, and central banks could create new money to buy them, not by mining gold, not by collecting savings, but by expanding balance sheets. The government spends the money. The debt remains recorded, and interest is paid from taxes. This changed the nature of borrowing. Debt no longer depended on scarce resources. It depended on confidence. As long as investors believed interest would be paid, borrowing could continue. This removed the final ceiling. Debt could grow without a theoretical upper limit. Between 1980 and today, global debt increased more than fourfold. During the same period, global economic output grew far more slowly. Debt began growing faster than the economy itself. But here's the part almost no one understands. If governments actually paid off their debt, the money would disappear. Because in the modern system, money is created when debt is created. More than 90% of all money in circulation exists because someone borrowed it. When debt expands, money expands. When debt contracts, money disappears. If governments eliminated their debt, the global money supply would collapse. That would mean deflation, economic contraction, widespread unemployment. This is not theoretical. During the Great Depression, debt collapsed faster than governments could replace it. The result was mass unemployment and a global economic freeze. So the system does not allow debt to end. It must be rolled over, refinanced, expanded. Only the interest matters. In the United States alone, annual interest payments now exceed $1 trillion. That is more than the country spends on education, more than it spends on infrastructure, more than it spends on national defense in some years. That money flows every year from taxpayers to institutions that hold government bonds, banks, asset managers, pension funds, insurance companies. Globally, governments transfer trillions each year not to reduce debt, but to service it. If you have a pension, a retirement account, or an insurance policy, you are part of this system, whether you realize it or not. Debt links everyone: workers, governments, financial institutions. This is why every country is in debt at the same time, not because governments failed, but because the system requires constant borrowing to function. Debt is not a temporary emergency. Debt is the foundation. $38 trillion is not a mistake. It is not incompetence. It is not mismanagement. It is evidence that the machine is operating as intended. And once you see that, you stop asking when the debt will be paid. You start asking who benefits from it never ending. Here, we don't study surface level problems. We study the structures beneath them. Because once you understand how the system was built, the world never looks the same again.